Hello and welcome everyone to our fireside chat with Fred Pai, the chairman and CEO of 3iQ. We'll be discussing the recent launch of the Bitcoin fund in Dubai on NASDAQ Dubai. I'm your moderator, Zachary Cefaratti. I'm the CEO and founder at Dalma Capital. If you're joining us after the fact on YouTube, please like this video and subscribe to our YouTube channel now. Introducing 3iQ, the partner for this webinar. They were founded in 2012 and are a Canadian investment fund manager focused on providing investors with exposure to digital assets, disruptive technologies in the blockchain space. 3iQ is the first Canadian investment fund manager to agree terms and conditions of the Canadian Securities Regulatory Authorities to manage a public Bitcoin investment fund and multi-crypto asset fund for Canadian accredited investors. Access to these new technologies can be daunting, costly, and inconvenient. So 3iQ has worked out through a stringent regulatory process to offer investors a convenient, familiar, safe way to invest in products and gain exposure to digital assets. So it was a very exciting time. It was 2 weeks ago. Fred was at NASDAQ Dubai ringing the opening bell. It was covered by all of the media here. I think it was on the front page of every news outlet in the region, not only when it happened, but when it was announced in the months prior. And it was certainly a great debut for the Bitcoin fund in Dubai. Fred, I'd love to start off with just recapping your experience in Dubai, your experience ringing the bell at NASDAQ Dubai, and the reception that you've received here.
Well, first of all, Zach, thank you for having me on and recapping that amazing 2-week period we have. And I want to thank everybody at Dalma and Canaccord Genuity and the team at 3iQ for making it just such an extraordinary week. The reception was phenomenal. I mean, they turned the heat up for us. I think we averaged 52 degrees a day for the first 10 days that I was there. So, I've probably shed a good, stone or two and feeling really good and energized. But the reception was extraordinary, and the media, both from Dubai itself, but also from around the region, the Arabic press was extraordinary. We did many interviews that were cast in a number of languages, and we were there to show the enthusiasm that the regulators in Dubai, that work very closely with the regulators in Canada to accept and take the judgment we want in Canada and allow us to transport that to Dubai. So the reception was extraordinary, and I think somewhere between the 50 to 60 meetings plus the over 200 people that attended our sessions, Zach, it was absolutely wonderful.
Yeah, it was certainly great to be part of that, and I was very proud to not only be working with 3iQ, but really very proud of Dubai. I was proud of how open Dubai was in receiving the Bitcoin fund onto the exchange, how smooth the process was in terms of managing it. I think it took you 5 years to get onto the Toronto exchange. Dubai was just under a year, so pretty fast relative to the process. Certainly thorough. Certainly no stone was left unturned. The other great thing that we've been seeing is the response from the markets here, the appetite for exposure to this asset class, the appetite from other market participants to be able to have this product on their platform and to understand it. And one of the key focuses over the next period, post listing, but ahead of any potential offerings being made, has been to make sure that investors are educated about this asset class, about what the offering or what the instrument is. So I think that there were some really interesting slides and data that you had shared with some of the parties that had been presented to. I was wondering if you might be able to share those with the audience and help them understand what exactly this Bitcoin blockchain is and what it really means and why this is now an asset class.
Well, that's Zach. I think you hit the nail right on the head there. I think we had a lot of individual meetings, and a lot of people who said that, oh, certainly, we're jumping on the Bitcoin, the blockchain bandwagon specifically, but when they actually came and saw our educational piece that we did, they were going, wow, people have never shown me that. So, as I said, with your permission, we discussed that. What we should do is we should actually show them, the Bitcoin blockchain live as we speak. So I'm sharing my screen here. It usually takes a couple of seconds to click in. But if you take a look at the screen, what you're looking at right now is the actual power of the living Bitcoin blockchain operating as we speak. Every time you see a blue light flash, it means there's a computer in that location that's recording the last transaction. So if I just gave Zach, I took my phone, I gave Zach 1 Bitcoin, that transaction gets recorded on 100,000 plus computers around the world in about a 10-minute period. And you can see, and there we just had Montreal pop up, and we just had Cairo, Egypt, and you've got, and I always like to laugh when everybody says, yeah, China's banned it. But if you notice, the computers and the nodes in China are definitely alive and well, and definitely still partaking in the Bitcoin blockchain. But when you see this, every time a blue light flashes, it's not recording one transaction. It's recording thousands of transactions that are, let's say, packaged together in a box. But for simplicity's sake, we're going to call that box a block. So right now, what happens is a block of transactions goes around the world while we speak. And right now, block number 690,019, meaning since the beginning of the Bitcoin blockchain, that's the number of blocks that have gone around the world and updated every single transaction. And all these transactions have to match, and they will always match. And if the computer that's recording the transaction doesn't match, it's not included in the blockchain. So it's really important to see that the only way to turn this network off would be to shut down all the electricity in the world or shut down the internet. If you looked at this 40 years ago, you were actually looking at the internet live. Now, what I want to do is show you quickly what that block being created looks like. On the right-hand side of your screen, you see a $269,000 transaction beside a $25 transaction, beside a $146,000 transaction. These are the transactions that are happening live as we speak. Those transactions go up and sit in the memory pool on the right-hand side of your screen. They sit in that memory pool, and they wait until the block 690,020 finish going around the world and updating all the transactions. And then a new block gets created, and it is chained to the block in front of it, which means the data is now cemented in history forever. It is immutable, and it can never be changed. That is the power of what we call the blockchain. To bring it into today's lingo, we called this the Secure Value Transfer Protocol. The evolution of the internet is nothing more than a bunch of protocol evolutions. And we've been explaining to people that from, simple mail transfer protocol to voice over the net protocol, to text messaging protocol, to live streaming protocol, all these protocols have completely disrupted everything you've ever done. And now you've got the secure value transfer protocol that's going to disrupt everything, because now you can do and embed secure value transfer of value, ownership, title, or money, and everything will use the blockchain to do that. And the first most powerful way to get access to it is through the Bitcoin blockchain. and hence you access it through Bitcoin. And I think when we showed this to people, when people can now, Zach, touch and feel and see what it looks like and see how powerful it is and see how big it is, that entire concept of tulip bubbles and everything else is, goes out the window, is the most powerful secure computer network in the world, and it's worth more than zero.
So I love that you touched upon what I think is so interesting, the history of these different protocols and the evolution of those. And I think it's something that also helps people to understand whether or not they've missed the boat or whether they're late to this. Because again, the examples that you gave, so starting with the formation of the internet. Do you mind walking us through those and why these protocols take a long time to gain mass adoption and from where it starts from, the protocol being created until that protocol is actually something that is widespread, and how Bitcoin is actually quite analogous to email, SMTP, and many other protocols that took some time to gain really mass adoption?
Well, it all started off, Zach, and that's a great question. It all started off in 1971 with the TCP/IP, which was the original transmission converter protocol, the internet protocol, which was developed by the US Defense Department. But one computer talked to another halfway around the world. And once they figured out how to do that over telephone lines, it wasn't until 1982, or 11 years later, that the SMTP was created, which was the simple mail transfer protocol, which actually allowed you to send a message from one computer to the next. And then, and that was invented in 1982. I can guarantee most people on this call didn't get their first email until 1996. So the fact they haven't bought their first Bitcoin, 12 years after Bitcoin was created, it took them 14 years to get their first email. So yeah, they're not too late. But then it was the real birth of what we call the World Wide Web and the Internet Superhighway, it was called. The Information Superhighway, it was called. And that's when websites, the HTTP Hypertext Transfer Protocol, allowed you to instantaneously jump from one to the next. And that was the big one. But then voice over internet protocol wiped out long distance telephoning. But voice over internet protocol was, again, 1994. And people didn't start using it or get rid of their long distance phone cards until 2005. So so it does take a long time for the adoption to do it. Obviously, the secure value transfer protocol was invented in 2008, and it already is the most powerful investment ever of anything in the history of the world, to go from zero to a peak of $1.4 trillion, within a 10-year period. Yes, anything that moves that quickly obviously is going to have periods of correction, periods of skepticism, and everything else like this. But it doesn't go away. When people took a long time to go to live streaming, which was originally created by the BitTorrent protocol, when you go to live streaming, can you see live streaming disappearing from our lives ever again? The answer is no, of course not. And the reality of secure value transfer of money, whether it's stable coins, whether it's Bitcoin, whether it's any other method of currency, it's going to happen, and it's not going to go away. You can't put that back in the bag and say, sorry, we can move billions of dollars around the world instantaneously, securely, and virtually for free. And people will go, oh, that's going to disappear. Of course it's not going to disappear. It's just going to get bigger and more powerful. But the way you get access to it is you have to own the underlying token that powers that blockchain. So the difference between email, you can't own it. The difference between live streaming is you can't own it. The difference between the blockchain is you can own it by owning the underlying tokens that give you access to that protocol. And this is the first time. It's like owning a stamp. If you own the stamp that you had to put on email, which you don't have to, obviously, but if you owned it, today the value of email would be enormous.
Yeah, absolutely. And I mean, I think that what we've seen is, am I sharing my screen here? I actually had one little thing that I wanted to share. Maybe it's up now. So there's a an adoption curve that every technology follows. And we've seen every technology from the telephone to the automobile to electricity, radio, air conditioning follow some form of what they refer to as the S curve of adoption. And this is something that Bitcoin is following as well. Bitcoin and blockchains are still at an early stage in that S curve of adoption. I'd be happy to share this kind of slide with everyone after this session. But the point is that just like with SMTP was invented what in 1984, Fred?
82.
82, and most people didn't send their email, the first email, until 1996. Just like most people haven't entered their first Bitcoin transaction or set up their first Bitcoin wallet, the adoption phases, the early moving from the innovators to the early adopters, and then into mass adoption is part of that path. And what 3iQ I think has done with the Bitcoin Fund is created a channel for mass adoption, created a channel to adopt Bitcoin and blockchain through the public markets, which are covered by some $150 trillion of investors. Again, if investors in that $150 trillion wealth management and asset management market were to put as little as 1% of their assets into crypto, would more than double the market cap of the entire crypto universe. So that's really what I think has been a powerful part of what you've done, and it certainly wasn't an easy battle. It wasn't as like setting up a wallet or a crypto exchange that's unregulated. It was 5 years of blood, sweat, and tears going through the public markets in Canada and then here in order to do that. One of the questions from Hugo Moreira is how many active Bitcoin nodes we have running today. The press used to say some 80,000 nodes. But BitNode's website only shows 894. Fred, that's a number that I don't know off the top of my head, but would you maybe have insights into the number of nodes that are running?
Sure. That's a great question. Bitnodes.io that we were looking at that have the live, they run at about 10%. So I think if I were to look back, there were probably about 8,994 for sake of picking a round number. There are probably about 8,000 or 9,000 nodes running right now. That's about a 10% selection of all the nodes that are actually running. But the part we didn't talk about, all nodes do is record the latest transaction. What protects and powers the blockchain are what we call Bitcoin miners. And Bitcoin miners, you can tell by the hash power, meaning we know how much computing power a Bitcoin miner uses. So we can tell that there's about 45 million computers powering the network and protecting the network. And those 45 million computers use about 4% of the world's electricity. And so what I'd like to do is head off the next question, which is, well, how much of that electricity is renewable, and should it be renewable, and can you restrict it? And the answer is no, you can't restrict it, which is the beauty about having the open network. But renewable energy is significantly, once the infrastructure is built, it's significantly cheaper than any other type of energy. right now, we believe it's about 62% of Bitcoin mining is done with renewable energy. We'd obviously love to see the world absorbing and adopting to 100% renewable energy. You know, and I will tell you the Bitcoin, you know, powers that be, meaning the 45 million people that are involved in it, are definitely interested in moving this more towards a renewable platform and a renewable resource.
So going back to the recent listing, what does this mean? What is the implication for the capital markets, for the institutions here? How is this adding a layer of dynamism? What are you seeing as the overall impact for this? You know, for those of us that are based in the DIFC, that are in the financial services industry, that now have this instrument trading on one of our local markets.
Yeah, so let me start off, Zach, and say it's not without its challenges. You know, we obviously launched a great fanfare. We had amazing television exposure, we had amazing radio exposure, we had amazing social media exposure. The people from the DIFC, NASDAQ, Dubai, BH Mubashar, Canaccord yourselves, and the DFSA, more importantly, all worked hard to get this up and listed. The back end of the reality of having the one global security has presented a number of challenges. So originally, and will continue to be the view of 3iQ, is that we believe our Bitcoin fund should trade 24 hours a day, 6 days a week. We get the 6th day because Dubai is open on Sundays. But stock settlement, getting accounts open that obviously conform to anti-money laundering and know your client restrictions, the big hedge funds from around the world that would like to take advantage of providing liquidity in Dubai haven't been set up yet, and this is going to take a while. You know, we're trading, you know, a small amount on Dubai, but the demand is massive, and we have to be able to satisfy that demand. A lot of that's going to have to come by the market participants, and we believe Dubai should be able to buy Bitcoin through the Bitcoin fund at a great price, at great liquidity, and that will continue to be our priority over the next few weeks. With that will come potentially, you know, a reopening of a launch in Canada that might provide liquidity to Dubai. So we're working on solving all of those problems, Zach, right now. But again, the market makers and the players that are there now have really tightened the market. It looks like, you know, there's liquidity now and certainly some supply. We do have a few other amazing announcements that we're waiting to come through with the FSA, and a lot has to do with things along the mechanics on how this all works. So stay tuned. It wasn't just one week in Dubai or 2 weeks in Dubai, which sounds like a movie, 2 weeks in Dubai, you know, to come in. It was really, you know, an opportunity to showcase and get the first step started. There are probably another 7 countries we're looking at right now to expand.
Yeah. And I mean, I'd love to kind of recap on some of the things that you just touched upon. So so basically what happened was the Bitcoin fund was originally listed on the Toronto Stock Exchange, right? And it's been trading there for over a year. And a secondary listing on NASDAQ Dubai, what that means, if you could maybe explain exactly what that means, whether that's something, you know, how what a secondary listing actually is, what these shares are, why also their shares had to be moved from Toronto over here to provide liquidity, how the fact that there's been actually more demand than there was supply of shares in the local market without you know, an offering as part of the secondary, how all of that works, because it was certainly quite a journey and has been met with quite a lot of enthusiasm, but also, you know, something that I think is important to educate the market about.
Well, I guess, shall we call this friction, Zach? One of the reasons why the blockchain will solve everything by reducing the friction on trading stocks around the world instantaneously, securely for free, is we have to work through the current friction of the certain things. So yes, if I have a firm XYZ in Canada that owns a bunch of the Bitcoin fund and would like to sell it in Dubai, they actually have to move those shares over to Dubai first before they can sell those shares. So we're trying to work with our market participants to increase their positions and actually get positions on the books in Dubai with the record keeper. So it can all trade, instantaneously and seamlessly. And the same is if somebody buys in Dubai, they want to know that they can sell it in the more liquid market in Toronto. But that'll be more obvious or evident when we start to list in Singapore or London or Hong Kong or wherever we decide to get accepted next. So that's really important. What I want people to understand is, by buying the Bitcoin fund, you're buying a physical representation of 100% Bitcoin. So the fund has, let's say, $780 million US in it. It's got $780 million worth of Bitcoin, and that pool tracks the price of Bitcoin perfectly. In fact, it sometimes outperforms Bitcoin after expenses. So what you have to do is it's just a great way to have that representation, but it's regulated, it's legal, it's on your books, it's part of your financial statement. The due diligence was done for 5 years by 2 regulators. You can feel very comfortable that you don't have to go out and buy your own Bitcoin. Now, for some people, going out and buying your own Bitcoin is worth it, but again, the friction in just buying your own Bitcoin, moving the fiat currency around, converting the fiat to Bitcoin and pulling the fiat out and everything else like that, that is sometimes significantly greater than actually just the management fee on the Bitcoin fund. So there's different ways to invest in Bitcoin, or either through these kind of regulated products, but also potentially just through buying our fund, which we think is obviously the easiest, most liquid way to buy Bitcoin in the world.
Well, one of the interesting dynamics that we've seen over the last year, and I wonder if it's something that you can unpackage now, particularly as we discuss the difference between closed-ended funds that are listed and ETFs, funds versus direct investment, is that the Bitcoin fund actually outperformed Bitcoin since it listed by some 300 basis points, I believe. Now, how exactly did that happen, and why is that made possible through some of the things that make a closed-ended fund unique?
Well, again, the point of our fund right now is to give people access that normally wouldn't have access, right? Like if you have an investment policy statement at your family office, you have 2 choices: change the investment policy statement or invest in an alternative asset that's already regulated and sits in a portfolio. And I think if that's, I'm not sure if that's the answer you were looking for, Zach, but the point is to provide easy access that the due diligence has already been done without trying to set it up on your own. We have been able to convince people that it is a new asset class. It's non-correlated. All the money managers of the world spend their time looking for non-correlated asset classes. But these are going to get bigger and better, right? We're just talking, we're step 1 of what people are now calling the DeFi revolution, the revolution of decentralized finance. You can expect 3iQ owns Canada Stable portion of Canada Stable Corp, which already has stable coins, that we have lending platforms. You can expect us to, be leaders in the entire DeFi movement. And all of these are going to start off with little pieces and positions and portfolios and just try and get bigger and bigger and bigger as they perform and as we start to understand the risks. in our digital yield fund that we're launching our demo stage, the risk is what are the credit models that are involved in doing digital asset credit risk? And S&P and Moody's haven't created risk models on digital yields yet, so we actually have to go out and build some. So we're really at the beginning, Zach, of getting into that asset allocation for people. But we think it's just going to grow and grow and grow. But your first step is buy Bitcoin and be comfortable with the asset class.
So, regarding the different, well, actually, there's a question from the audience from Alicia that dovetails perfectly into the next thing I wanted to discuss with you. Alicia Rasul has asked about some of the benefits of the fund to potential investors in this region, particularly those who already own crypto and already have wallets, what some of the USPs are. And certainly I think you can unpackage some of the USPs that apply for any fund in general. But I think one of the particular things in this region that we see is that many of the region's banks actually are restrictive for investors doing any activity in crypto and in Bitcoin through whether it be through exchanges, whether it be through OTC brokers. If they see a transaction and ask about a transaction that had to do with a cryptocurrency exchange, often investors actually have their accounts closed or are told that if they do a transaction again that they will have their accounts closed. I think, again, one of the key reasons for that is that the banks are very nervous about the potential when clients are trading Bitcoin through unregulated products or unregulated exchanges, potentially engaging in some form of money laundering, and the potential implications that has on banks for facilitating that. For example, if someone says that they just made their deposit in their local Emirates NBD account from a trade that they did on a Bitcoin exchange, how does the bank know that they weren't part of a ransomware attack or some scandal or some illegal activity that the bank is now indirectly helping to integrate into the financial system? I think this is one of the key risks. So that's an example of one of the key risks and why banks have been quite apprehensive about their clients engaging in this asset class. Again, why is 3iQ a solution to that? Why is that a solution not only for the banks to be able to have comfort for their clients and their customers to be able to access this asset class, but also for customers to actually gain access, which is, again, what you've highlighted, is that this is, first and foremost an access product.
Yeah, I'm going to agree with you and confirm that every bank we've talked to, their number one concern is anti-money laundering and proceeds of crime and terrorist financing. There's no head of any bank anywhere in the world that wants their bank tied into any of those three issues. And I think if they start accepting, Bitcoin deposits or anything along those lines, they understand the risks that are involved. Now, those of us that are big, fans of the Bitcoin blockchain know that certainly it is pseudonymous, but it can be traced. It took until, I think it was 2015 before the FBI, CIA, and Interpol realized you could actually trace all those Bitcoin transactions and all that criminal activity. And as you've seen since then, most of it has been, absconded. But having said that, one of the biggest challenges we had with the Ontario Securities Commission was that they can trace all 3iQ's Bitcoin transactions, meaning we take in the cash and we buy Bitcoin from AML, KYC, regulated, FinTrack, legal institutions that have done their homework and are absolutely clean. And you can, what we call, cipher trace any of our Bitcoin. So I think what's happened is we've seen people go, well, now we know that a regulator can come in and make sure that I'm just not involved in any of that. and they understand who our custodian is, the third most powerful, custodian in the world in our view. We definitely, which is, I'll give them the plug, Gemini. But our trading counterparties at Genesis and the rest of the world, have been, extraordinary. Our business partners are VanEck, CoinShares, ARK Invest, people whose integrity is not questionable. We've been in this business an awful long time, and it took 5 years to get it right, and we got it right. And I think that's the important part. As part of her question saying is, oh, why don't they buy Bitcoin themselves? So for example, in Canada, which is just one tiny country in the world where we actually have to pay taxes. We actually have retirement accounts, and we have tax-free savings accounts. And you can now put Bitcoin, which most young people who are the big savers of the world right now, those 25 to 35-year-olds want to save their Bitcoin, and they want to save it in a tax-free environment. And they can do this simply on their brokerage statement within their banks and within their brokerage firms. And, just the simplicity of what we've created. Now, if we can make sure we get liquid trading around the world 24 hours a day, all the better it'll be for everyone involved.
Well, I'd like to share kind of my own example as a reiteration of that. And Fred's heard this a couple of times. It used to be something that I kept a deep, dark secret, but now I've become more open about it, particularly given that I think it is a validation of everything that 3iQ is doing. When I first actually bought Bitcoin, it was in 2011. And people always hear me say that, and they say, "Why are you still working, right? Why are you on an island somewhere?" And that's because actually the first Bitcoin that I bought, the first, was a few transactions of Bitcoin that I did. First of all, it was very difficult back then, right? I was, researching all this stuff on Reddit, and I was having, there weren't really wallets. There were only a handful of wallets that could be used. It was not an easy thing. You had to go on these forums and do research, and most of it was garbage, and try to figure out what you were doing. And then I had to mail gift cards, physical gift cards. I had to mail Amazon gift cards to some guy in Japan. Right, and then one day, all of a sudden, Bitcoin show up in this wallet that I'd set up, and what ended up happening, to make a long story short, is I ended up losing those Bitcoin. They're lost, they're gone forever, and I thought at that time, back in 2011, being at the kind of first leading edge of this asset class, I thought, if I can't figure it out, right? I'm a guy who's obsessed with two things: technology and finance. If a guy who's deep into technology and finance can't figure this out, other people are never going to be able to figure it out. It's never going to work. It's never going to get the adoption. It's never going to be useful. And I lost interest. And unfortunately, I lost interest until 2016 when we started working on this asset class again. But since then, what has happened is that organizations have layered on top of this pathways to adoption, just like, again, taking the example with email, with SMTP. SMTP, when it was first created, was something that was very difficult to use. It wasn't very user-friendly, but people built layers on top of that protocol and email clients and things that helped build that curve to mass adoption. And for most users, a lot of the use cases around DeFi may be quite some distance into the future, but Bitcoin is seen as principally as a store of value and as an investment. So for those that are applying to that use case, 3iQ has created a bundled package solution that's ready to consume, that you don't need to worry about losing your Bitcoin. You don't need to worry about it disappearing, or a wallet, or a hack, or someone dying with the private keys, like the Quadriga CX example that Fred gave. So this is really how far the asset class has come, and I think for the vast majority of users, products like this are creating that on-ramp to adoption that are really helping pave the way forward. And actually, I'd like to dovetail this into a good question that came from Tushar, and that's his view on the question about regulation in general. He's saying that exchanges are coming under scrutiny of regulators. He mentions the FCA, probably in reference to the recent what was it? Not Bitfinex, but maybe Fred can. Binance, yeah, Binance, who's run into trouble there. But actually, this is something that we would definitely see as the next curve and the next phase in this adoption is not only this being made available to the masses, but the channel for that being regulated channels. The regulators of the world want to see this done right. They want to see that that this isn't a channel for money laundering activities, for activities that could expose investors to avoidable risks. Quite similar to the path that Fred, you went on when you brought the first, you were part of bringing the first gold investment instruments onto the financial market. So maybe Fred, you could share a little bit about the corollary between bringing a Bitcoin fund onto the financial markets and exchanges and what you had originally done with gold, the same challenges that you faced, and how that kind of all looks towards a market that is going to be increasingly regulated, and where regulated channels are going to be not only the pathway to mass adoption, but also the channel via which all participants are likely going to be forced.
Yeah, thanks again for that, Zach. But yeah, I'll just tell the story because we have just a few moments for a funny story. But yeah, it was 1983. I was working at Guardian Trust after the original gold rush in the end of the 70s and the early 80s. And there was no way for investment advisors to buy gold for their clients. The same way there was no way for them to buy Bitcoin for their clients. And they're not going to go buy 10 bars of gold and put them in 10 accounts for their clients. It just isn't going to happen. So Howard Kelly said, well, let's list gold, silver, and platinum certificates on the Montreal Stock Exchange. So as a 23-year-old newbie, I went to their securities regulators and said, well, we'd like to list our gold, silver, and platinum certificates on the Montreal Exchange. They said, well, young man, gold is volatile, it's speculative, it has non-traditional custodians, and it's used for criminal purposes. Why would we ever approve that? Well, 3 years later, we got gold, silver, and platinum certificates approved on the Montreal Stock Exchange. And today, some of the biggest ETFs are GLD, and people getting exposure to gold as a non-correlated asset class. And we are fans of gold. Having said that, so you fast forward 35, 40 years later, and here I am at the Toronto Stock Exchange saying, well, I'd like to put Bitcoin in my client accounts. And they said, well, why would we ever list Bitcoin? It's volatile, speculative, it has non-traditional custodians, and it's used for criminal purposes. And I looked at the legal team and I said, we can win this. And that's what we did. So let me emphasize that what I believe is that increased regulation in the regulated product space for digital assets is a very, very, very good thing. Do we think they will immediately allow Monero, Dash, Zcash, the so-called privacy coins or privacy tokens that aren't traceable, that can be used for money laundering, et cetera? Do you think that those will be in a regulated platform? No. Do we think that government will regulate exchanges that allow the movement of those type of coins? Our intelligence tells us, no, it's not going to happen. All exchanges right now are facing challenges of how do we become regulated. I do know Abu Dhabi has one that's regulated. I'm not quite sure how they determine which tokens they're allowed to distribute on that. But one thing we had to talk to the regulators about is they're not the ones that should be actually making the decisions on what we can or cannot invest in. but they have to make sure that it's structured correctly and it fits it within the laws of any sovereign nation. And I think that's a win-win-win situation. Now, one very important key category in Canada was the Ontario Securities Commission and the Central Bank of Canada had a study that said 5% of Canadians own crypto. So we put up, in our evidence that, as per the Ontario Securities Commission, 5% of Canadians own some kind of digital asset or have exposure to the space. And we thought that was sufficient, that it's the regulator's job to stand up and regulate it. Because in Canada, we had 110,000 Canadians lose $250 million. And a lot of those people said, hey, where's the regulator? How do I get my money back? And they said, well, it wasn't regulated. Well, it's their job to regulate those sorts of things. So when I see the FCA come up with their own study saying that 25% of Britons own digital assets or some kind of crypto, we have to work with the FCA and say, you know what? We will show you how we can package this, put it into a platform, and have it regulated. And that's the same with the SEC. The SEC on the ETFs has a serious issue. Market participants, there's no way to control the amount of Bitcoin that would move into these funds. And then, when you hear something like, some funds in the United States that want to just convert from closed-end funds to ETFs. So you're taking money that was raised on a non-regulated platform and trying to move it onto a regulated platform. It's just called money laundering. It's you take money that's not regulated and turn it into regulated money. I don't see any of that happening. I do think we do have one of the better solutions. So, look at the news pages to see what happens, but increased regulation is good for the entire blockchain space, for the MENA region, for the North America, Toronto, and Dubai, certainly.
Yeah, and certainly the regulated path is the way forward. And I think that 3iQ is a perfect example of that. Fred, I'd love to actually, if you wouldn't mind sharing a little bit more about when you face these challenges from regulators, what were the key areas that they focused on? I think there were 5 areas that were when you made your first initial filing that you had to prove, and I think once those were set forth, it set an incredible precedent for the Bitcoin fund and for other products to be listed on the markets.
Well, yeah, the judgment is public, obviously, and therefore anybody can see the results. But the first 5 reasons were: number 1 was, can this be properly custodied within the laws of these major regulators, major exchanges? And that means, does the foreign custodian, is it a viable financial institution regulated by a proper, governing authority? Do they have the proper capital base, et cetera, et cetera, et cetera? And the answer was yes. We proved that without a shadow of a doubt, our custodian and sub-custodian classified as regulated. Number 2 was, can it be audited? Do you have a top auditing firm that will be able to verify and justify all the Bitcoin that you have in your account, and will they back that up? Well, we're very fortunate in Montreal. Grant Thornton, I don't know about Grant Thornton, RTGT, at a company called Cadillac C that was building out the very first real audit firm to audit blockchain transactions. And they said absolutely they could audit it. And they had been auditing our fund for 3 years, our global crypto asset fund for 3 years. So we won on that. Third one was pricing. If I ask you right now, what's the price of Bitcoin? Well, probably the range of people, the 50 people that are on there, are going to be within $1,000 of each other. But what's the real price of Bitcoin at any given point in time, specifically at 4 p.m. Eastern time when your fund is being priced? And is that, which ties into the next question, is that pricing void of market manipulation? is there any chance that the pricing of your fund is subject to market manipulation? So what we had to do is we actually had to build our own index. We worked with Van Eck and Invest and created the Invest Crypto Compare Institutional Bitcoin Fund Index that ran off the 6 regulated washing, type of exchanges that we could identify. And we believe that index proves that we have the proper price of Bitcoin at any given point in time in the day. It's not, it's not Fred Bitcoin Index and we're pricing my fund off Fred's Bitcoin Index. It's properly constituted and constructed, and it is in concert with European laws. So that's all very important. That's a problem with some of the ETFs in Canada right now. The indexes, the performance of the funds are very different because the indexes they're using are very different. And we won't go into some of those details. But finally, the government always had it's not in the public interest. And we won the right that no, it is absolutely in the public interest that regulators stand up and regulate this. You cannot. The regulator's job is not to shield investors from speculation or from volatility. They're supposed to shield them from fraud, bad actors, all the bad things that happen in the stock market. So we were able to prove that with our pedigree and what we knew and our expertise, we weren't an ETF company coming into the Bitcoin business. We were the digital asset business that got into the asset management and the ETF business. So that's really quite key.
So one of the questions from the audience has been around the audit and how you were able to get Grant Thornton to be able to perform the audits of the fund. And this is something that we certainly have seen as one of the initial challenges that we had to get through in order to get regulated products was teaching auditors how to account for Bitcoin. And I remember actually back in 2016, 2017, some of the first crypto products we had worked with, actually Grant Thornton at that stage had a policy that they wouldn't audit, they wouldn't sign off on audits for cryptocurrency products. So how is that something you were able to get through?
Yeah, as I said, it was Montreal's division, and I'm from Montreal, Montreal's division of Raymond Chabot Grant Thornton that built out Cadillac C. And Montreal was a very early hub. Francis Pouliot and a bunch of his team all went over there and said, this is a big challenge, is to get auditors to actually understand the blockchain. Well, the beauty about the blockchain is it's an immutable ledger that's open source. I mean, they can look at my address all day long. They know what I bought, what I own, what I have, and what I paid for it. And it's open source. It's there all the time, every day. It's actually easier to trust. First of all, our custodian and everybody else had to go through SOC 1, SOC 2, Type 1 and Type 2 audit. So the financial institution has to be auditable, but then on top of that, you can audit the blockchain. And auditing the blockchain is the easy part. Making sure that the custodian has the proper policies and procedures in place to make sure that the money is safe is really quite critical. And as I said, we now have KPMG. You've seen custodians such as BNY Mellon, CIBC Mellon, agreeing to move forward in custodying these assets because that's who they are. But it's a learning process. We just happened to do it 4 years earlier than anybody else.
Well, Fred, I know that you have a hard stop at 5 o'clock Dubai time, so I really just wanted to thank you and to everyone in the audience for joining this session. Again, as Fred said, this is, this show is definitely not over. There's a lot more to come with 3iQ in this region. And I think you'll be seeing a lot more of Fred in Dubai and in the Middle East as that rollout continues. But yeah, Fred, any closing remarks that you'd like to say for particularly for people in the region, and when we might be able to see you again here on the ground?
Yeah, well, I'll definitely be back on the ground in Dubai. And I was looking at your background there. It looks like you're getting ready for your Eid celebrations with your balloons and your gold your gold hanging down there. But I will be back. I'm going to wait for it to cool off a little bit. I will be back. The reception. We're going to go out to the rest of the region. We'd like to be in Abu Dhabi, Bahrain, Qatar, Saudi. We want to meet some of the important people that are looking at this asset class very seriously. But more importantly, the investment advisors, the reception we got from investment advisors was extraordinary. They can now introduce this asset class to their retail clients. And, it's extraordinary. It's a prospectus-based listing. It's as simple as we said in Dubai, buying Bitcoins now as easy as 1, 2, 3 IQ. So remember the stock symbol QBTC on the NASDAQ Dubai. And thank you all very much for attending. And thank you, Zach and Rahan Florence, for having me one more time.